Apple's latest earnings are out. We'll tell you what you need to know. Investor Beat starts now. Thanks for watching. I'm Chris Hill. A good day on Wall Street despite a sudden drop early in the afternoon. The Dow dropped more than 150 points after the Twitter account belonging to the Associated Press was hacked. A fake tweet was posted about an attack on the White House. But after everything was quickly sorted out, the Dow recovered and ended the day in the plus column. Joining me in studio today, Jason Moser and Matt Argersinger. Apple's second quarter earnings were better than analysts were expecting. The numbers included 37.4 million iPhones sold and 19.5 million iPads sold. The company also announced it is increasing the quarterly dividend by 15%. Is this going to stop the bleeding?
Well, if there's any indication here in the after-hours trading, it seems like the stock is trading up a little bit. And there was a lot to be happy about with this release. There was one concern I had. We knew the gross margins were going to come in relatively low. They had guided lower. But at 37.4%, that was even the low end of their range. And so for everything the company's doing right, they exceeded expectations by every mean here. I'm still a little bit concerned that maybe those glory days of Apple's high-margin model might not have passed us by.
The company also announced they're going to increase the buyback program by $50 billion. And they can do that because they brought in an additional $8 billion in cash this quarter. Cash hoard is now up to $145 billion.
Yeah, that's right, Chris. And that, to me, is the big story here. I mean, they're authorized to buy back $100 billion in stock right now. That's effectively a quarter of the company's shares, increasing the dividend. So this is actually, a pretty compelling stock right now, just from an income standpoint and from a capital allocation standpoint. I like the move here. I think it's powerful and strong for the stock.
As you indicated, we saw it moving up after hours. Every reason to expect that Wednesday the stock will be moving up. Is it too late for investors to get in?
No, I don't think so. And I think that really a lot of the reasons that Matty laid out right there with their capital allocation, they're going to keep buying back stock at opportunistic times. They've raised the dividend. They're going to even borrow money to really implement this stock buyback program, which I think says a lot as to really how much value they see in the stock price. And they're also going to plan to make sure to offset any and all dilution there. So we should see over time that share count come down. I liked the company yesterday. I liked it last week. I'm going to like it tomorrow. I still think it's a buy.
All right, let's get to some of the day's movers and shakers. Netflix hitting a new 52-week high after adding more than 3 million subscribers in the first quarter. The stock has doubled just so far in 2013. Have investors missed the boat here? Or?
This is just, it's been a huge winner. It's up. It was up again huge today. This is really about crushing expectations, and I think to me about House of Cards. This was their shot at doing their own content. They used their data. They knew what customers liked. They made a great show. They brought in over, I guess, 1 million subscribers on this on a free trial basis, and didn't lose too many once they came in for the free trial. So that's big, and the member count is huge. I still like the stock at a $12 billion market cap.
Coach up after third quarter profits rose 6%. The company also announced a 13% increase in its dividend. What's not to love?
Yeah, talk about a company that has just done a great job returning capital to shareholders. Coach is another great example. A lot of good things from this call. I think really, though, it's just taking that global perspective with Coach. And whether it's, they're going to buy back the 50% interest in their joint venture partners in Europe. They're going to spread their footprint in China. They have Latin America, Asia Pacific. I mean, the Middle East, you name it, they're going there. So really, I think this is still a very well-run company with a lot of growth ahead. I own the shares personally, and I still think they're a buy today.
Delta Airlines turned a profit in what is typically the weakest quarter of the year. Results were better than expected, and shares were up on the news. I should point out, though, that first quarter profit was actually down 94% year over year. How low are the expectations for this airline?
Pretty low. I'd say almost as low as JCPenney's right now. I mean, airlines have been a really tough place to invest. But this, actually, this could be the time to start looking at the airlines. There's been a lot of consolidation. U.S. Air and American Airlines merged recently, or have announced a merger. Fuel costs have come down a little bit. Profit margins should be higher for the industry going forward. Delta actually might be a compelling investment at some point.
And finally, Travelers doing its part to lift the Dow index today. First quarter profits up 11% and shares hitting a new 52-week high. This is your old company. They seem to be getting on without you, though.
I think they'll manage, Chris. But yeah, this is the stock I was watching yesterday, and really I was focused on the book value and their combined ratio, and both metrics came in really impressive. I mean, book value's grown over 6%, and combined ratio is now around 88.5%. That's after these effects of the Sandy storm from last year. I just think there are a lot of things this company's doing right. They manage their capital very well. They don't chase business, which means that they benefit from these hardening insurance prices. So I like Travelers as a long-term investment.
All right, that's going to do it for Tuesday. Let's look ahead to Wednesday. Matt Argersinger, which is stock you've got on your radar?
Lumber Liquidators, ticker LL. You know, they report earnings tomorrow. It's just been a huge winner over the past year. I mean, this is a company kind of give you a gauge of how the housing market's going, and that's what I'm looking for. I'd love to see a pullback in the stock because I actually like the company a lot and would love to buy in at a better price.
All right, so you're rooting for it to go down.
Always.
Jason?
There's still another way to play smartphones here, and it's with Qualcomm. And this is not a company that's just relying on Apple. They have a piece of pretty much every smartphone out there. And when you look at some of these untapped markets like India, it's still pretty compelling play. But they report earnings tomorrow. Going to pay attention to the shipments of chips. Going to pay attention to the actual shipments of devices and the pricing, the average selling price of those devices, to give us an idea of how many devices they're in out there and what kind of pricing they're maintaining.
You going to be rooting for a pullback too?
Sure, why not?
All right, for Jason Moser and Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.